Assalamu alaikum everyone. I'm Mahdi Islam. The last three digits of my ID is 183. Today I'll be presenting an overview of Bangladesh Bank monetary policy for July to December 2025. We will go through the key highlights, compare this policy with the previous half year, look at the tools being used, and finally discuss some reform suggestions for the future. Our second slide is policy summary. The latest monetary policy has taken a contractionary stance, meaning the goal is to reduce money supply and borrowing in order to control inflation. First one is repo rate. The repo rate, which is the rate at which Bangladesh Bank lends money to commercial banks, has been kept unchanged at 10%. The standing deposit facilities or SDF rate, which is the rate banks earns when they keep excess funds with Bangladesh Bank, has been reduced slightly to 8%. For credit growth, the private sector target has been lowered to 7.25%, while the public sector credit target has been raised to 20.4%. In terms of result, inflation has eased to 8.48% and the target for GDP growth is 5.5%. Our third slide is policy objective. The main objective of the monetary policy are to control inflation and keep prices stable. Second one is to restore overall macroeconomic balance. The third one is to support exchange rate stability, meaning keeping the value of the taka steady against foreign currencies. Four number objective is to encourage fiscal discipline so that government borrowing does not spiral out of control. And the last one is to lay the foundation for sustainable long-term growth. Next topic is comparison with previous policy. If we compare this January to June 2025 policy with the July-December 25 policy, here what we see. The repo rate stayed constant at 10%. The SDF rate was cut by half a percentage point from 8.5% down to 8%. Private sector credit growth was tightened from 9.8% to 7.2%. But public sector credit growth was raised from 17.5% to 20.4%. This shows that while private business are being restricted from borrowing too much, the government is expanding its own borrowing to fund its activity. Our next topic is tools used by Bangladesh Bank. To achieve these goals, Bangladesh Bank is using several monetary policy instruments. First one is repo rate and reverse repo rate. Repo rate is the rate at which banks lend money to central bank. Next one is standing SLF or standing lending facilities, which allows banks to borrow from the central bank during short-term liquidity shortage. And next one is standing deposit facilities or SDF, which allows banks to deposit their extra funds with the central banks. Now quantitative tools. Cash reserve ratio or CRR, the minimum percentage of deposit banks must keep in cash with Bangladesh Bank. Next one is SLR, the percentage of deposit banks must maintain in form of liquid assets like gold or government securities. Next one is open market operation, where the central bank buys or sells government securities to control liquidity. Third one is exchange rate management, meaning steps to keep the value of the taka stable. Reserve rate management, which is about maintaining adequate foreign exchange reserve for import and external stability. Our next topic is government statement. The Governor of Bangladesh Bank has emphasized 3 points: no rate cuts until inflation drops below 7%. The focus is on ensuring long-term financial stability, rebuilding foreign exchange reserve, and maintaining fiscal discipline are top priorities. This message is clear. Stability comes first, even if short-term growth slows. Our next topic is suggested for reforms. Some possible reforms for a more balanced policy are a gradual interest rate cuts once inflation is firmly under control, targeted stimulus packages of MSMEs, that means micro, small, and medium enterprises, which are vital for job creation, improving monetary transmission mechanism so that the Bangladesh Bank changes rates, the effect quickly reaches business and consumers, and strengthening the interbank market so banks can lend to each other more efficiently. Second part, on the structural and institutional side, the reforms should be deeper. Solve the non-performing loan (NPL) crisis, meaning loans that borrowers have stopped repaying. Promote financial inclusion so that rural and low-income people have better access to banking. Reform the exchange rate framework for more flexibility and stability. Amend the Bangladesh Bank Order of 1972 to give the central bank more independence and modern governance. Our last topic, conclusions. To wrap up, Bangladesh Bank monetary policy for July to December 25 is cautious but necessary. Inflation control remain the top priority. Reform the urgently needed for long-term reliance. And with a balanced approach, the economy can move toward more inclusive and sustainable growth. Thank you for listening me. That's it from my side.